So what does that mean for asset prices in the market on a longer term basis and where we are in the cycle? I mean, because now we've got these super players that have taken the left tail risk off and debasing currency. What does that mean for investors? And what does it mean for people? So people watching this, I don't quite know what you're talking about. What does it mean to you?
So first of all, Raoul, if we look at the central bank balance sheet in the context of everything that's ongoing with tariffs, NATO, the negotiations with China, etc. Let's just address a question that I get a lot around that, because we obviously know that China, Japan, etc., they hold a lot of US treasuries. And it's a theme that is always brought up when we get these geopolitical tensions back and forth between the countries. So
assuming yesterday the bond market moves one day and everyone goes, China's dumping treasuries. I mean, all the time.
Yes. I don't buy that, by the way, but let's just assume that China sells US treasuries and Japan will decide to do the same as a consequence of what's ongoing on tariffs. I don't buy it, but let's just assume that. I think the worst, quote unquote, worst case scenario would be that the Federal Reserve will have to step in with some sort of light yield curve control in such an environment, which ultimately leads to the same conclusion that the currency will be debased because they'll have to print dollars to avoid escalating tensions in bond space. So the layman terms conclusion of all of this is that the dollar that you hold at a bank deposit will be worth less over time as a consequence of the central bank bailing out the bond market. And I don't hold high hopes on behalf of the Doge project. I think it's almost impossible to bring the deficit down. Ideologically, I think it might give it a shot.
Some of the increase that's coming from the interest payments, but it's just slowing down the rate. It's not reducing it.
Yeah, and as we speak, it also kind of feels like Elon has thrown in the towel on that job to some extent. Even though you'll have to praise him for his efforts, but it's an impossible task to really change the trajectory of the deficit, in my opinion. So the point here is that we'll have to do something to avoid a scenario where interest rate payments just grow and grow and grow and grow as a part of the budget. And take a look at the Japanese case over the past 2-3 decades to get some sort of feeling of where we're headed, because Japan ultimately had to protect the yield curve. Otherwise, the budget would simply not, it would not be sustainable without it. And now we're seeing, small signs of higher bond yields in Japan. And as soon as that happens, it doesn't really work, right? The central bank always have to, either rhetorically or via market interventions, step in every time something happens in bond yields in Japan. And I ultimately think that we're moving towards, over the next decade or so, some sort of similar scenario in the US.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.